Hi, Dean Jenkins with FollowMeTrades.com, and this is the stock market update for the week coming up of November 15th, 2015. I don't know what it's like where you're at, but here I'm about an hour south of Seattle in Washington State, and it is windy, and it is cold, and it is rainy. I wouldn't be surprised to look out the window and see Winnie the Pooh go blowing by. It's a great day to be inside and looking at stock charts, and that's what we're going to do here for a few minutes. I call my newsletter that I publish on the market Beyond the Noise, and I do that for a reason. If you look, here's some headlines. I haven't looked at headlines for a few weeks, but here's a headline from just a few weeks ago. This is from Fortune, a top-tier legitimate financial news organization, and here they're saying, wow, the stock market is having its best month in 4 years. And it was. It's not a lie. It's true. But here's another headline from Reuters, and this headline posted just last Friday, yesterday, and it's saying, "Wow, the stock market drops. It posts its worst week since August." And then here's another interesting article that I'm looking at. This one's pretty interesting. So this is a chart. This is from Bloomberg Business, and this chart is showing what analysts think about the probability of December rate hikes. Look at this chart, how it has just swung all over the place. From back when we were having the best month in 4 years, the probability that the analysts thought that the Fed would raise rates in December dropped down to like 25%, and just in a few weeks it has skyrocketed up to 70%. So now 70% of analysts think that the Fed is going to raise interest rates in December. Imagine if you were trying to trade based on this, what I call noise. It just draws your attention away from the reality. I live here close to Seattle. The Seattle Seahawks play here, and one of the things that the stadium is famous for is the 12th man and how loud the crowd is. And one of the things the crowd does is cause the opposing teams to make mistakes because of the noise. I see a stat that an average of 2.3 offsides are called against opposing teams, and that's attributed to the noise in the stadium, just so the teams can't focus and can't keep their eye on the ball because of just the overwhelming noise surrounding them. And that's what I think is really interesting. When I call my newsletter Beyond the Noise, I'm really trying to keep us focused on the reality of the charts in front of us and not get distracted by the news, the noise. So here's the daily chart of the Dow Industrials, and I like looking at the Dows. It's considered a bellwether for the rest of the market. I also look at the S&P 500, which is, the broad market. If you've been following me over the last couple weeks, I've been talking about this trend line right here, that this trend line was an important line. We had crossed through another important line. I said that was kind of a two-step thing. If it went through this line, that was step one, and then if it went through this trend line, that was maybe an indication that the market was going to go on to make some new highs. But I had said over the last couple weeks that it really looked like the market was consolidating. I thought the probability was that it would not go through this trend line, that it would reverse off of it. And look, it did reverse off of it pretty dramatically, leading to a headline that says, hey, this was the worst week in the stock market since August, this being the August move that they're talking about here. But this is a pretty dramatic move off of it. So the real question is, what happens now? What happens next? Again, if you've been following me, I think a bear market began back here, and I called that to my subscribers. We went short on some stocks. I called this a bear market rally, and I think the probability is that stocks are going to keep going down. And that really looks like it's going to play out. So, we made this sharp move down. The big question now is what happens next. It certainly could reverse back up. And as long as it doesn't go above, again, this trend line, and it goes up here and then puts in a new low, that for me is final evidence that when we're heading down, on down to make new lows, even go take out this low. So the next week or two are really going to be telling, and that's what I'll be watching and updating you on. But I think the high probability is something like this is going to happen. Now, if it does go up and break this trend line and does something like this, and it'll probably put in new highs. I think that's a low probability. I'm looking to the downside. That doesn't mean that every trade I take will be short either. There are still good stocks that will continue going up, and there are things that go up when the market goes down, and I'll be publishing those to my subscribers. Here's a good example of a stock that I'm talking about. This is one that I published for my subscribers. We got into this at this cyan line. We had our initial stop here. This thing, when we got in, it took off. We moved our stop up to this red line here, and at this point where it reversed, we scaled our position out. And this thing ended up going down and getting stopped out, but we made 4% profit on this trade in about 2 weeks. So we took out 4%. So that's really the benefit of really knowing how to read charts, how to follow the reality of what it's telling us, and then managing the trades very closely, very professionally in a disciplined manner. So even though this thing tanked, we were safe. We had moved our stop up. We had already scaled that. We made 4% on it in a couple weeks. I'll take that. A win is a win. Here's another quick example. This one is IMH. This is a mortgage company. We got in again here at this cyan line. We initially had our stop here. We trailed our stop up, and we scaled out up here at this reversal. And so even though this thing went down and stopped out, again, we made 5% on this one. And not a home run, but it's a win. 5% gain in a couple weeks. Now, most of my trades actually play out and go up into this target zone represented by these green lines, but they don't all work out. But by managing them very closely, reading the reality of the charts, taking action, we're able to still get profit even when the scenario doesn't play out. And earlier this year, we had some really big winners. We went short in August when the market was dropping, and we made those were some home runs. We did really, really well on that. Each week I do update gold and oil. So let's take a look here at oil first. Last week I had said it really looked like we had a bearish trend. Lows put in lower highs, new lows, lower highs, and I said it's the probability at this time was that it was going to go put in new lows, and it's put in an intermediate low, and there's a really good probability it's going to take out this low. So it looks like oil is going to continue working its way down, that it has not found a bottom yet. Now at some point it will retrace pretty dramatically up into somewhere into this zone up here is the high probability. But for now, oil's continuing to put in new lows, and there's no real trades. This trend is too long, so it's too late to go short on it, and we'll just have to keep waiting for it to finally put in a bottom and retrace. And we don't know when that would be. It could be some time. So here's gold, and last week I had said, hey, that gold gapped down, and it looked like it was in a downtrend, and that continued. It went down. It looks like it might be reversing here, but it did put in a new low. It took out this previous low here, and the chart is showing us that it probably will make new lows before it reverses and goes up. Now, alternatively, if the market continues to go down pretty dramatically, then something different could happen with gold. Quite often, gold moves opposite the broad market, so this reversal, if the market continues down, this could do something like this. And if it does this pattern where it puts in what's called a lower high, and then it doesn't go down below this low, and then it puts in a new high, takes out this high, that's a pattern that shows that it has found a bottom and is a high probability of heading up. So we'll be watching for that if the market continues to go down. When gold finally does reverse, and it will at some point, there's going to be some great long trades on it. So that's the update for the market for this week. Stay tuned, and I'll continue to keep you updated on what's going on in the broad market, what the reality of the chart shows. We'll review oil, we'll review gold, and we'll see what the realities show us beyond the noise. Don't get distracted by the headlines. Keep your eye on the ball. Pay attention to the realities, and I'll do my best to keep you apprised of what's going on. Thanks, and we'll catch you next week.